Hello, money magnets and master traders. It is so great to see you all again. We get to see another day and experience it all. And it looks like on the daily chart for the SPY, it looks like SPY went for the gap fill. Me personally, I would have liked to see a close below the pre-gap area, but I guess this is good enough before SPY finally gave us some type of bounce. Looks like a relief rally, if you will. SPY was pretty oversold in the RSI, and that one bounce that we had on Friday managed to get SPY out of the oversold territory, resetting it a little bit. So hopefully, you guys were able to make good money last week. We had an amazing move to the downside. Friday was a little trappy in the morning, but in the afternoon trading, it actually picked a direction which was going for the bounce. We recovered a few lost levels here. Now, Uncle always say we don't want to call a bottom unless the price action gives us a false breakdown setup where it recaptures some lost levels. Now, not every false breakdown puts in a bottom, but every bottom, 100%, every bottom started with a false breakdown, okay? So we need to take a look at today what levels were lost and recaptured and what levels need to recapture some more if the market wants to give us more upside, okay? And if that was just a relief bounce, if that relief bounce was just going to turn into a dead cat bounce, we also need to know the levels that needs to fail today so that we know when to enter puts or enter calls and all that happy stuff. So you guys see here, on Thursday, the last fib level that was lost was that 588 level. SPY managed to open around 585.5, bounced, going as low as 582.4. I had a fib level around 583.3-ish. So there was some buying pressure from that area that was strong enough to recapture that 588 level. Recapture of that 588 level, that is the example of what a false breakdown setup looks like. Okay. When we have a level that we lost, we broke down legitimately, preferably on the daily chart, and it recaptures the next day or following days. And that recapture to 588 on Friday led to another recapture of a lost pivot level, which was around 592. Okay, so we had two levels that were recaptured on Friday. So what does this tell us? Where do we go from here? As long as above 592 and 588, the false breakdown setup stays intact. So if we are above 592, I will be targeting 594, 596 fib level and the 50 daily moving average, which is around 598. False breakdown setups are bullish, and a recapture of that 50 daily moving average would be a big victory for the bulls, because there's no bull market or bull trend that trades below the 50 daily moving average. Okay, so if the bulls want a big victory, the recapture of the 50 daily moving average would be a big victory, because that would put all-time highs or new all-time highs back in play. It would be a possibility. Okay, that 50 daily moving average is also where the bears want to defend the most, 598-ish area. And if they do defend it, it needs to be strong enough to break down support levels. So if we bounce some more and retest that 598 area, it needs to be strong enough to break down 596, 594, and 592. From where it's at right now, if it doesn't retest the 50 daily moving average and it simply wants to drop back to the downside, then 592, 590, and 588 must fail to turn SPY back to being bearish and take out the possibility of a bigger bounce, to take out that possibility. Why? Because breaking down those support levels would invalidate the false breakdown setup, right? If bottoms are put in with false breakdowns and the SPY breaks down those levels, guess what? False breakdown setup invalidated. There is no bottom. As a matter of fact, we might either chop some more or we break down some more, okay? So that's how I'm looking at this. That's how I'm approaching this. Level to level, no greed. Below the 50 daily moving average, Uncle Charters is still bearish, overall bearish. But I'm always willing to change because I'm a sheep style trader that follows the price action, okay? I follow the price action and the money follows me. So if we click, once again, if we clear 594, if we clear 596, if we recapture that 50 daily moving average, 600, 602 or higher would be back in play. And if we fail to recapture that 50 daily moving average and we start breaking down support levels, 592 and 588 being the two critical ones, then the false breakdown is invalidated, no bottom is in, and we are likely heading down lower, okay? Triple Q also gave us a little relief bounce as well, but paused right at that 78.6 fib level that I have, which is at 508.5. If there is more upside to be had, okay, potential double bottom here, potential, then 508.5 and 510 must clear to put 512, 514 in the fib level at 515.5-ish in play, with 517, 519, and 520.3 above, okay? So now that we retested this fib level at 508.5, if it truly rejects and the time is to be bearish or continue to be bearish, 507 and 505 must fail to put 503, 501, 499.7, and 498 or lower back in play, okay? Don't trust the rejection unless it's strong enough to break down support. Give us some of that false breakdown, in this context, get some of that false breakout. False breakout is bearish. When we clear a resistance level and it breaks back below. So 508.5 truly rejects. 507 and 505 must break down. Give us the false breakout setup. Tesla gave us a little bounce, a nice little bounce. But I tell you, the range of this, the low was like what, 273.6. The high was 293.88. That's a big range. That's amazing. You can make money to the downside, to the upside. Don't let your personal feelings get in the way of your blessings. We're money magnets. Let that money come to you. And in this case, the way we do it, we let the trade setup come to us. All we do is react to it. The trade setup comes out. We're not hunting the setups. The setups present itself to us. And once it tells us to come, we go get it. That's when we get it. Matter of fact, we don't even go get it. It comes to us. We just react. We allowed ourselves to react to the price action. I like that much better. In this case, what did Tesla do? It recaptured the 292 level. That's the 1.786 fib level. It recaptured that. It wasn't a strong recapture, but it did. Next resistant level that I have, all right, above 292, next resistant level is at 294. If it can clear, we can bounce 297, 299 fib level, 301, 302.5. Next fib levels at 304 and then 306 above. Bottom line is this. If Tesla wants a bigger bounce, a bigger relief bounce, which it probably really needs, it looks like it, must stay above 292 to keep the false breakdown intact. As long as it stays intact, they have a shot at some upside. If 292 fails, guess what? That recapture we had, invalidated. That will put 290 and 288 in play. And if those levels fail too, that is bearish follow through, more downside incoming. 285, 283, 280 would all be back in play, guys, with this ticker symbol right here. It's a bit high risk, but if you can handle the risk and you know how to trade sheep style, money magnet mindset, There's lots of money to be made. This thing's like, it's like a mine, a money mine. Okay. Anyways, NVDA also came with a nice, beautiful bounce. Paused just below the fib level, 1.236 fib level, which is at 125. If more upside is to be had, 125 must clear to put 126.5, 128, 129.5, 130.7, 132 in the fib level, around 133.5-ish in play, okay? If 125 truly rejects, I need to see support at 123.5, 122, and 120 all fail to give us more downside. To tell us it was a dead cat bounce. I'll trust the rejection when support fails. But if 125 clears, more upside is possible. IWM came just shy of testing the 215 fib level. Just shy as a resistance. Because we lost that level on Thursday as a support. We lost it as a support. Looks like it's trying to retest that area as a resistance. Bears must defend there at 215. Because if IWM breaks out of 215, more upside will be possible. 217, 219, and 222 will all be impossible. Possibly higher than that. Okay? But if they can defend 215 and support, what I have support at 213.5-ish, if they can break that down, more downside is possible. 213.5 failed, 212, 210 or lower will be incoming. Apple gave us a nice pullback on Tuesday, Wednesday, Thursday. Looks like they went for a bounce on Friday. Got the bears excited though. They went to a low of 230.2 before they gave us this amazing bounce back to the upside. There was some decent buying. There was some good buying pressure there, guys. And if there is more upside to be had, is that Uncle's new catchphrase? I gotta think about that one. But if there is more upside to be had, the resistant level at 242 must clear. Guys, if you want that to be my new catchphrase, comment below. If there is more upside to be had, put it in quotes, okay? I love you guys. 242 clears, definitely more upside is to be had. 245, the fib level at 247, which also is a gap fill level, would be targets. 245, 247. And above 247 would definitely be bullish with 250, 251.5, and 253 plus in play. If Friday was a dead cat bounce, okay, we need that false breakout setup. What level got recaptured? The 240 level. So 240 must fail to start and then really break down that 237 fib level. They tried to do it on Friday, but there was buying pressure. So bears want to turn this around. 240 and 237 must fail. Y'all need that daily chart close below 237, and that'll definitely put more downside in play. All right, 236, 234, 230. I think all the way down to 228.4 would be a possibility if Apple decides to drop down again. But if there is more upside to be had, 245 and 247 must clear for me to favor more upside. Amazon, little bounce. Well, we gotta look at the context, right? On Thursday it broke down a fib level at 210. Friday we recapture that. So that's the level to watch as far as false breakdown setups are concerned, as far as the trap setups are concerned. So to invalidate that trap setup, 212 and 210 must fail. If it breaks it down, the false breakdown is invalidated. No false breakdown. Got invalidated. Sorry. And if the false breakdown gets invalidated, there's no bottom. There's no possibility of a bottom. So if we're bearish, you want to see 212 and 210 fail to put 208, 206, possibly all the way down to 203 this time in play. If you are bullish, you want to see that 210 hold on any pullback. All right. Preferably what you really want to see is more resistant levels clear. The next one I have is at 213, 214.5, and 216. All of those levels must clear. That'll break up this downtrend line that I have here to put 220, 222 or higher back in play. Microsoft went for a little bounce as well. Managed to recapture the 396.3 level. That's a fib level. If it wants more upside, 398, 400 and 402. I'm going with 402. Must recapture to put 406 or higher back in play. But if 396.3 and 395 fails, the false breakdown setup we had from Friday, invalidated, gonna drop back to 393, 391.8, 390, and 387-ish. They'd all be back in play, guys. Meta, decent bounce. We gotta watch out. We had around the 642-ish area, like not once but twice. February 28th, 5th, and February 28th. Got some strong buying pressure, guys. Gotta watch out for that double bottom W pattern stuff. Those W patterns are strong, I tell you. And if it is gonna play out, I need to see 670 clears. If it does, 674, 675.3, 677, and 680 would be my targets. I can't really favor a bottom is in unless 690 clears, all right, which is around this pivot high, close to this pivot high, 688.6. Then 690 would be great. If those clear, I'd favor a bottom is in, all right. If Friday was a dead cat bounce, once again, support levels must fail. 668. Is that number again? 666. I hate that number. Those levels must fail. 664, 660 or lower would all be targets, guys. Meta is a very volatile stock, guys. It's not for the faint of heart, but if you can handle it, there's lots of money to be made. Respect your stop loss. Don't lead with greed. DXY continuing the bounce here. Is it still inversing the SPY? I don't know. It's been really interesting. The action's been really interesting with this. But I tell you this, I have next resistance at 107.6. If it clears 108, 108.7, 108, 108.7, 109.1, and then 110 would be targets, okay? If 107.6 can truly reject, 107.6, yes, if it truly rejects, I need to see a couple of levels fail, 107.1 and 106.9. Those levels fail, I'll trust the rejection, and yeah, DXY could be a lot more bearish. So watch that 107.6 level. Above, more upside as possible. A rejection definitely would be bearish. Coin, going for the bounce. I love this ticker symbol. A really nice ticker symbol. 214 is the equilibrium for tomorrow, guys. That's the fib level. We lost it the 27th of February. Recaptured it the 28th of February. The next day, we recaptured it. So 214 is the equilibrium level. If we drop back below, false breakdown setup, invalidated, and more downside as possible. 210, 206 or lower incoming. This is a very volatile stock, so I'm not giving you guys the levels, but this is so volatile that it'd probably break more than $2-3 moves at a time. But yeah, above 214 would be bullish. Clearing, I have next resistant level at 216, 218, and 220, guys. If those levels can clear, more upside would definitely be possible. 221.5, 223. I got a fib level at 224.3. Gap level around 227. Those levels would be targets if we can stay above 214. DOGE, I ain't got much to say about it except for the same thing as last time. Bearish on DOGE. And if we lose 20 cents, 19 cents, guys, we're heading down to 18 cents or lower. I wouldn't recommend looking long unless 23 and 24 cents can recapture. And if you're patient enough to wait for that setup, I have targets at 26, 28, and 30 cents. Possibly you can go a little higher than that, but it's not possible unless we can recapture 23 and 24 cents. I'm not trusting it. And as far as ticker symbols that I don't often cover, but I like to give some attention to, SMCI, okay? Had a decent week of trading this past week, although Friday was pretty crappy, not gonna lie. But you know, I have a feeling that this week we're gonna get a little bit more volatility. Okay, I could be wrong, but I'm just saying my prediction for this ticker symbol that we're gonna get some volatility. And if it's to the upside, I need to see 43 clears. If 43 clears, guys, 44.5, 46, 47.8 would definitely be targets. My guess, or I guess prediction, is we go fill the gap at least, which is around 51. All right. But it's not possible unless we clear 43. Okay, please use a stop loss. Okay. Now, if the volatility returns or come back and it's to the downside, supports at 41 and 39.3. Okay, if those levels fail, then my prediction is we head down lower. To play it safe, I'm gonna play it level to level. 38 and 36.7 would be my take profits level. But if I was to leave a runner and try to take a guess on how much further we go down, I mean, below 36.7, I have 34 and 31. But you know what they say, gaps get filled. I have a gap all the way down at 29 cents, at $29. And there's another gap all the way down at 21.4. So, I mean, I'd like to see the gap get filled. SMCI is probably going to need some bad news for that to be possible, okay? But the main thing I want you guys to take away from my coverage here is the levels, okay? Don't focus too much on my predictions, okay? Because I'm often wrong. I'm not gonna lie, I'm often wrong. My crystal ball don't work as good as other people, like Ron Walker. Anyways, 43 clears, look to long. 41 and 39.3 fails, look to short. I recommend just playing it level to level. And if you want to catch the home run moves, let your runners do the heavy lifting. All right, that's all I got for you guys today. I love you guys so much. Remember, you guys are money magnets. You guys are money magnets. You are a money magnet. Money flows to you easily. Money flows to you abundantly. The trade setup, you don't got to go hunt for the trade setups. They come to you. They flow to you. They say, trade me, man. Trade me. They desperately want you to trade them. And you just got to sit there and say, do I want to? If your answer is yes, then do it sheep style. If your answer is no, hey, it's okay. Relax and focus on what's important to you on the day. Either way, live your life on purpose. Love y'all. Peace.